Hello everybody, welcome back. Sorry, I'd made a whole video and just realised that for some reason my mic had cut out halfway through. So you had I had a really detailed video for you before, but unfortunately I don't have the time to make another one like that. So I'm just going to run through what it was that I just said. And if you want to join the Patreon for the live streams, we're doing one tomorrow night. So the link's in the description below for that. Right, so let's get stuck in. So I'm just admiring Crow. I just posted a trade that I made yesterday based on the 4-hourly Bollinger Band Center. And again, it's probably worth even just starting with this, right? So you have a nice big run up from a golden cross, big parabolic move, huge pullback all the way down to 20 moving average and a 21 exponential, which is basically the center range. 65% of the time you get a bounce from there and actually remain in the portion of the band, maybe even make a new local high, maybe even a new higher high. And that's where we was, and that's where I took the trade, and that's the trade I posted in Telegram this morning. So just thinking about that as just a trade setup, which in this instance is materialized on a 4-hourly. Let's move over to Bitcoin on the weekly. Higher term time frames are always my favorite. And then we'll talk about the cycle top, right? So we're just going to get rid of this red line. Right, so what have we seen here? So we see a move from a 200 exponential, a golden cross retest, and then we see a big run up. And then what's happened recently? A pullback from the high to the low, which in this case is a 13.5% move down towards the center of a Bollinger Band, 20 and a 21 exponential moving average, where you'd have a 65% chance of a bounce from here. So that's what it is at the moment. It's a series of higher highs, higher lows, leading into an area where you do have the most likely outcome statistically is a bounce from here, maybe even a continuation to a new all-time high from here. That's the most likely outcome from here. I wanted to address this as well real quick because again I made a detailed video. It was over a 20-minute video, so I'm just going to run through it again from what we see now. So this is the previous cycle high, big run up, big massive move, big crash down. This is over 50% really from wick to wick. It was like huge, but even in this instance over a period of 7 days it was still about 50%. Huge move down into the 50 where we sort of reaccumulated, bounced back up. It's also worth remembering that this was the crash that we had. Money printers were turned on, probably led to a very fast, probably too fast move up, not just for Bitcoin but all crypto and stocks as well. And then we continued up and then we popped around here. Not just Bitcoin, not just altcoins, everything. All stocks, indices, everything popped around here and continued down for a long time. Together, the Bitcoin market, the crypto market, the stock market, everybody. So this is similar. So we had this top over here, moved down into the 50 exponential. It wasn't particularly horrendous crash, but it was quite fast. But it wasn't anywhere near as fast as this. Different, but similarities, I agree. Then when we moved up, we got a continuation of a trend signal. This is a trend signal on an Ichimoku cloud. We're still in that. The cheeky span is above the price. Cross has still not, it's diverging, in fact, it's not even converging towards each other. This blue and this red still diverging away from each other, still a trend. So the Ichi cloud is still saying we've got an uptrend, it's still in play, allow for it to continue. This one did not have that. We had a negative cross here, and that was it really, negative cross. We continued down, we got a positive cross here, it was too late. Cheeky span was below the price action, couldn't get ourselves back out again. So there's differences, big differences to be honest with you, although there are similarities to the structural shape of it. So Bitcoin to me looks like it can easily bounce from here and continue on to a new all-time high, despite September being my prediction of a market cycle peak. Now I'm not looking to go around changing the goalpost, but I just want to address how and why I was always talking about September being a peak. It was based on this total 2 fractal. The fractal is based around a measure from the previous cycle high, and it's as simple as this. It's high to high. This is all it is. It's a high to high. And it was a guide, and that guide has served us relatively well because the similarities, at least at the beginning of the market cycle, were very similar. So you had this downtrend on our cycle, downtrend on their cycle, let's say the previous one, bounce back up. Yeah, it's a few weeks off, then continuation down, bounce back up, continuation down, bounce back up, down, up. Things started getting a little different here because of the crash and the money printers, but still it gave us the confidence to remain in the market, and it also gave us the confidence to incrementally buy on the way down, for the next high, blub, 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 and again, blub, 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 blah, 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 blah. So it's served well. And if you were to measure this to the actual week, it's going to be the Monday, the 22nd of September, 2025. That's when it says the market cycle would peak. If you're going to go by it exactly, and again, it's not a dogmatic, it's been a guide and it's held relatively well, and it's still looking relatively good now, I have to say. But it's not gospel. It's not absolute gospel. What are we seeing here on this chart? Well, you've got bearish divergence, never a good sign. Bearish divergence on the money flow index, not a good sign either. A consolidation is definitely due, I would say, based on what we see right now. However, we're above all moving averages. This is good look. Same thing for Ethereum. Just move over to Ethereum. And again, I'm rushing this video out now because I've got things to do today. But you know, as far as Ethereum is concerned, a series of higher highs, higher lows, which is fine. At the moment, we're still doing a higher low. We had bearish divergence from over here. We were really kind of worried, or more worried over here than we were anywhere else. And then we continued up. I would say that this part now, we made a new all-time high. The money flow index and the RSI all gave bearish divergence leading into that peak. And I would be looking at this now as almost like a resetting kind of area. If we can hold this area for Bitcoin, hold this area for Ethereum, generally speaking, we're in business. But if we do come down lower, we've got 3,950 on the daily. On the weekly, we've got the 10 exponential, which is 3,800. But the 4 hourly is the one I'm interested in as well, because the 4 hourly gives you support around 4,200. It's a golden cross retest, so not many alts actually look this way. Most altcoins are below their 4 hourlies are bearish. There's not many altcoins out there that we saw on our last stream or the one prior to that showed bullish 4 hourlies, and this one is still in a bullish trend on the 4 hourly, looking for supports around here. So you might get a bounce and maybe even a V-shaped recovery from as high as 4,180 or thereabouts. So Ethereum still in an uptrend, fine. Bitcoin still in an uptrend, fine. So there is still uptrends across the board. It's still all uptrends. Even the total 2 is still an uptrend. And the difference is clear on Bitcoin that this cycle peak it does not, although there is similarities, structurally similarities, there is differences on the Ichimoku cloud, which generally should give confidence to the idea that the cycle is not over yet. So we might have a few more weeks. Again, 22nd of September is the exact date, but as you saw in the fractal, it's been a very good guide and there has been a lot of similarities to it. But maybe we do extend to what generally everybody would have thought, which is around November, December, which is where the previous cycle hit, 2021, and the prior cycle to that, 2017 into 18. Those are all around November, December. So maybe that's where we go as well. So yeah, there was a lot more to my previous video, but for some reason the mic was cutting out. Let's just see if it's working now. Yeah, it is. So I'm gonna leave it there. I'm gonna upload this video now, and hopefully that's in some way useful to you. I don't feel like there's a big problem at all in crypto. I think stocks are holding reasonably well. I think the Dixie's still got a little bit further to go and just remain a little bit lower for a longer period of time. I don't really, I'm not really concerned about how things appear at the moment, because statistically it's more likely to bounce from here than break down, and that's just the statistics of it. And all trading is about balancing out the odds, and if those odds favour your risk tolerance, and for me, it absolutely does. It favours my risk tolerance. Just as you've seen this bounce here, and you're starting to see a bounce here on the weekly Bollinger Band Centre. It's similar to the trade I made yesterday, again on Crow, just on a very different time frame. The Crow trade I took yesterday was based around the 4 hourly, but the same thing applies. Move up, big peak, move into 20 to a 21 exponential moving average, and take the bounce from there, and that's where we are, and I'm just about 300% up at the moment on that trade. So nice. It's statistics is all it is. It's not bias, it's not willingness, it's not hopium, it's just statistics. And we're seeing a very smaller version of this Bitcoin setup take place already on Crow. This is the statistics playing out in front of your face. This time it's worked in my favor. Maybe it won't work in my favor in Bitcoin, but it was certainly working out in my favor on Crow, and that is a more volatile, crazy chart, given everything that's happened, and it still works. So more of a risky trade that I took here than what's going on for Bitcoin as well at the same time. So just stand back and reflect on that. But also, I'm not here to tell you what to do. I'm just explaining what I'm doing, what I'm thinking. This isn't obviously financial advice. You all know that. We are probably way closer to a peak than we are anything else anyway, so there is a lot of risk in the market generally at this moment. So, you know, if you don't have the stomach for that risk, that's completely fine. Like, you know, I never ever think less of people when they decide to bow out of the market and take what they've got. It's all about how much you've made, not about, you know, what I'm trying to say is it's not about staying in until finding the absolute peak. It's about leaving the market with profit. That's all it is. That's all we're doing here. It's not. There's a problem with I think when you look at traders on social media, it's all about conviction, and people are probably more happy to be absolutely 100% right than to just accept that they've made money out of the market and they can carry on with the rest of their life. Yeah, I mean, for me, I'm going to go into town now with the kids and carry on with the rest of my life. But yeah, a lot of people will be stuck to these charts, watching it minute to minute. But again, I've got the confidence in what I'm seeing to allow for my trades and my positions to just continue on for a couple of weeks at least and see where we go. If we lose this area for Bitcoin, it is 100,000, it is 95,000. But for the moment, it's not. And so we're looking for the bounce. We're also looking for a continuation. That's what we're looking at, whether it happens immediately over the next week or maybe even the next few months. Generally, at the moment, the odds are in your favour for continuation from here. Right, I'll leave it there. Thanks for watching. Take it easy.